All right, let's have a look at Q3 2025 of Sea Limited. I'll show you how I assess the earnings report and how I try to do a valuation of Sea Limited. I'll show you why I think that it's trading at least 50% discount right now. So let's look at the earnings report. Sea Limited consists of three businesses. The total group is made up of the e-commerce part, Shopee, the digital financial services part, and the digital entertainment. And now the way I like to do valuation of Sea Limited is actually to just calculate the valuation of Shopee and then go by that because that's the most important part. But just to start another place, if we look at the digital entertainment business, Garena, then we should look at the bookings number, look for growth there. That's for gaming companies, bookings is the better thing to look at. It's up 51% year on year, so it's really strong, and it's a very attractive gaming business in my opinion. The Free Fire IP is very good, and they've been managing it for years, and yeah, it's a strong business. A gaming business, you could do a valuation of, say, 12 times EBITDA of it. And we should use the adjusted EBITDA because there will be some deferred revenue, and that blurs up the picture a little bit, in my opinion. So use adjusted EBITDA when you look at digital entertainment. And it's 466 million this quarter, which is stronger than it usually is, and maybe a little bit too strong, or too strong to sort of hope for that to be the same in the future. But it's a little shy of 2 billion in EBITDA a year for digital entertainment. And if you do times 10, then it could be worth 20 billion, the Garena franchise or Garena Business Group. So, but let's look at e-commerce because that's the most important part. Yeah, just to the market total market cap is 84 billion right now. But e-commerce here, we look at GMV, which is the overall sales on the platform. So we look for is the activity increasing on the platform, and it definitely is. It's growing 28% year on year, and I think there should be some FX headwinds because of the dollar weakness over the last year. Then we look at revenues, and revenue is total revenue here is growing 35% to 4.3 billion. Now, the revenue is consists of three revenue streams that you should know the difference of. The first one is product revenue, which is how we get from 4.3 billion in total revenue to 3.8 billion in marketplace revenue. So it's 500 million, and that's where Shopee is a 1P seller, so they sell directly to customers. They sell their own products. That's not what they want to do. They want to be a platform, but in order to complete the platform, have all products, etc., Shopee has to have their own products on the platform. So they're not competing with customers. They don't want to. They just want to finish the platform so you can get everything that you need to get on the Shopee platform. So once the product revenue is out, you have marketplace revenue. So marketplace revenue is made up of two revenue streams. One is core marketplace revenue. I'll get back to that. That's the attractive part. It's what you want to see growing. The other one is value-added services revenue. Now, this is mainly logistics costs. So when people buy a package and they pay for logistics, or when they have a package sent and they pay for logistics, it goes into Shopee's marketplace revenues as value-added services. Now, Shopee does not want to be a logistics company. They don't want to earn money on this. They just do logistics to facilitate being a platform and facilitate a good service. So they actually want to decrease costs of logistics, and they want to decrease prices in order to increase the value that they are giving to sellers and buyers on the platform. So, as an investor, what you want to see is this number to go down, because when it goes down, it means that Shopee has been able to charge less for delivery, which makes the platform more attractive. And the other reason that value-added services sometimes is lower than other quarters is that when they do marketing, they do free delivery on a couple of buys for new customers. And so in quarters where they do a lot of marketing, you'll see a decline or a falling value-added services revenue. And when they do marketing, it's because that they see either a low customer acquisition cost or they see an increase in customer lifetime value. They never do marketing if it's not profitable. So whenever marketing is increasing, it's because the flywheel is humming, because the business is well. So you want to see this number go down. But when you see this number go down, it's really good, but it decreases the marketplace revenue. So therefore, you should not, as an investor, look at marketplace revenue, because it's a mix of two revenue streams where one you want to see falling and the other you want to see increasing. So what you need to look at is core marketplace revenue. This is the fees they charge from sellers, and it's the ads business. And you see, so it's high margin, very attractive revenue, and you see that growing 53% to 3.1 billion. So some people will say, no, 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 no. You need to look at all the revenue streams together. But actually, it doesn't really make sense. If you own a shop and you buy the building uh, in order to have the shop, the shopping window, etc., you don't factor in the investments in the building, in the revenue streams, etc. You look at the business by itself. So value-added services is only an enabler of the business, and the core business is core marketplace revenue. This is what you want to be looking at. It's high margin. It's growing 53.8%. Now, what could that be worth? And if you analyze this, just say four quarters at 3.1 billion, that's 12.4 billion. And you say, what is high margin business growing 53% worth? You could say that Shopee could be worth 120 billion if it's a price sales to 10, which is a SaaS valuation, which I think would be fairly cheap. So I would say that if you could go to 15 times sales on core marketplace revenue here, and that would be yeah, what would that be? That would be double the value that it is today, because the market cap now is 84 billion. Then you have, I think it's around 10 billion on the balance. And you have the Garena business, and you have the digital financial business, and then you have Shopee. So if you do it the other way around, you say that we only look at Shopee, and Shopee has 12.4 billion in core marketplace revenue. Then Shopee, as the only valuable part of Sea Limited, would trade off a price sales to 6.7-ish. And that's extremely cheap, in my opinion, for a high quality, high growth company. You get exposure to Southeast Asian consumers. They have very low discretionary incomes that are rising, and Shopee is sort of the perfect or C Limited is the perfect business to benefit from an increase in discretionary income in the young big populations of Southeast Asia. So yeah, so I think it's at least at a 50% discount at the moment. Yeah, and full disclosure, my funds at NewDeal Invest are invested um, in C Limited. You can find me on LinkedIn, on Twitter, and you can look for our business analysis at our eToro wall. Our portfolio there is partner portfolio is called NDI Future Tech. Look us up there and see some more analysis like this. So thanks for listening, and see you in a quarter.